When you look at Europe's tech scene, you hear two completely opposite stories. One says there's not enough money, and the other says there just aren't enough good ideas. Today, we're going to dig into which one is true, and why the answer to that question really shapes the future of innovation on the continent. So which one is it? A venture capital shortage or an opportunity shortage? You hear these two ideas thrown around constantly, and they're polar opposites. They can't both be true, right? Or can they? So on one hand, you've got the policymakers, the industry groups, and they're all talking about a funding gap. The story is that Europe's best companies are just being starved of the cash they need to get big. But then, on the other hand, you talk to the investors, the actual VCs, and they say, nope, it's an opportunity gap. We've got plenty of money, just not enough truly world-class companies to back. So let's break down each side of this. All right, first up, let's tackle argument number one, the funding gap. This is the narrative you're probably most familiar with, the one you hear from politicians and read in the headlines. So this viewpoint, which you often hear from political circles, basically says the problem is super simple. There's just not enough investment money to go around. They look at these really promising startups that just can't seem to scale up, and their conclusion is, well, the pools of capital must just be too shallow. And, you gotta ask, why is this argument so popular? Well, think about it. If you're a policymaker, it is so much easier to point a finger at the big, abstract capital markets than it is to turn around and ask, hey, maybe our own policies aren't working so well. Okay, so now let's flip this whole thing on its head and look at the other side of the coin. This is the view you get from the people inside the investment machine. Yeah, the folks who are actually writing the checks, the VCs, the limited partners, they tell a totally different story. They're saying, look, for the truly exceptional, world-class founders, the money is absolutely there. The real problem is just finding enough of them. And this isn't some new development either. Investors will tell you that for years now, both European and US funds have been on the ground, checkbooks open, ready to fund the right companies. The core belief is that capital will always find its way to truly great ideas. So let's just pause here for a second. We've got policymakers blaming the investors and investors blaming a lack of great entrepreneurs. These are two completely opposite takes from really smart, well-informed people. And when that happens, it usually means the real problem is something deeper that we're all missing. And this is where we get to the real heart of the paradox, because it turns out this isn't an either-or situation at all. It's a classic chicken and egg problem. This quote from Stan Bolin just nails it. What if it's not a funding gap or an opportunity gap? What if it's a feedback loop, a cycle, where one problem is actually causing the other? And here's the big reveal. The root issue isn't about late-stage funding, and it's not a fundamental shortage of great ideas in Europe. The real problem? It's about origination. It's a failure to get enough promising companies off the ground in the first place, right at the very beginning. Okay, so let's walk through this vicious cycle. Step 1, there's not enough seed money, that crucial first check for brand new ideas. Step 2, because of that, fewer great companies ever make it past the starting line. Then, years down the road, the bigger, later-stage investors look at the landscape and say, hey, where are all the great opportunities? And they rationally decide to invest less in Europe, which, of course, just makes the seed funding problem even worse. It's a self-fulfilling prophecy. Okay, so if the problem is a lack of early-stage funding, the solution seems obvious, right? Just open the floodgates. Pour a ton of government money into the system. Well, as it turns out, it's not quite that simple. Because history has taught us, again and again, that just blindly throwing money at the problem can actually backfire, like spectacularly. All that extra cash just ends up inflating valuations for average companies, and in the end, nobody gets the returns they were hoping for. So what have past failures taught us? Well, here's what doesn't work. 1, just inflating the prices for the few hot deals everyone is chasing. 2, having government programs trying to pick winners by chasing whatever tech trend is popular this week. And 3, propping up sluggish, zombie companies that can't raise money on their own merits. These are the traps we have to avoid. Okay, so if that's what not to do, what's the right way forward? Well, the evidence is pointing toward a much smarter, more targeted, and truly bottom-up strategy. A really important recent report from Bocconi University actually lays out a clear path. The core idea? We need to redirect resources away from these huge, collaborative, often bureaucratic projects and funnel them directly to early-stage independent companies. It's got to be about funding the best ideas that bubble up from the bottom, not just funding the organizations that are really good at writing grant proposals. And you know what? It's not just about funding the startups directly. It's also about backing the right kind of investors. We need fund managers who are actually educated in how VC works, who are motivated to hunt down those hidden gems, and who are willing to make those brave, non-consensus bets instead of just chasing the same deals as everyone else. All right, to pull this all together, let's use a quick analogy. Imagine you've got a solar farm, and it's seriously underperforming. Now, the people running the farm could make a couple of excuses. They could say, hey, we have a shortage of solar panels. That's basically the funding gap argument. Or they could say, well, there's just not enough sunshine here. And that's the opportunity gap argument. But what if the real issue isn't a lack of panels or a lack of sunshine? What if you went to the site and you discovered the entire solar farm was built in the shade? And that right there is the real story for Europe. It's not a sunshine problem or a panel problem. It's an origination problem. It's building its innovation engine in the shade. Everything, all future returns, all technological progress is downstream from that first step. The entire system has to be re-engineered to let the best new ideas actually get some sunlight. So, if Europe's real goal is to foster those next-generation, world-changing tech companies, shouldn't its entire strategy start with one simple question? How do we get out of the shade?